What's up everybody, Tom here with another video. Today we'll be discussing the latest stock market news that moved the markets over the last 24 hours. We'll also be taking a look at our technical analysis using the top-down approach on the S&P 500, Nasdaq, dollar index, Tesla, gold, Bitcoin and more to try to get an understanding of what just happened, why it happened, and where the stock markets are moving to next. So join me and let's take a look at this together right now. Stay tuned. Alright guys, so as you all know on this channel, we like to look at the previous days of performance to start with, to look over what actually happened and what was driving the markets yesterday. Well, yesterday was all about tech stocks, specifically really large tech stocks. Microsoft, Apple, all these FANG shares, Google, Facebook, Amazon, and Nvidia, and even things like Netflix, etc. all got dumped pretty heavily, and we saw quite a large movement out of the Nasdaq overall. If we look at here, the Nasdaq declined around 2%, and the Dow Jones and the S&P 500 actually didn't decline that much, and they were really just led purely by the tech stocks themselves. When we take a look at the sectors, again, it's all about XLK getting sold off yesterday, and that was the one that was driving the markets. A couple of notable things. Everything did sell at the end. You'll notice there was a pickup near the end here, and then it did start to sell. So why did this happen? Why did all of the tech stocks get sold off so heavily? Well, one of the reasons why was Facebook was hit with an antitrust suit that seeks to, of course, unwind things like Instagram, WhatsApp acquisitions, etc. And this is not something that's been new, but we've talked about it on this channel sometime, that the government wants to break up some of these big tech and also potentially wants to tax some of these companies a little bit more heavily. So this is weighed on sentiment, and when you have sentiment so high and so bullish that we've been seeing since the US election, any little bit of news can suddenly form a crack, which can form further selling and of course provide opportunity for people that are looking at buying the dips in this current market. So what have we been seeing in terms of CBOE, put call ratios and other necessary indicators that tell us whether the market is going to decline even further? One thing that happened yesterday, you can see here the Wednesday, December 9th statistics, is that put call ratios actually rose really high. So it went to 0.84. That means there was a lot of puts that were opened yesterday and quite a few calls that were closed. Call ratio to put ratio was really getting extreme, and you can see the S&P 500 overall a 1.63 rating, so not that high when it comes to put call ratios there. What about the fear greed index, the one that we've been looking at? Still has been very high, well over the 80, just dropping underneath the 80 now. And this type of greed index, whenever it's gotten this high, usually has shown a decent pullback. So now that we're starting to pull back here, will the stock markets actually decline further over this next couple of days of trade? We'll be taking a look at the key support resistance levels through our technical analysis throughout this video. But let's get started with the technical analysis, and the best place to start is the dollar index. The dollar index finally hit the 50 exponential moving average on the 4-hour chart. So that is the chart here. We did see two little kind of buy spikes off that underneath 91 zone, and now we're trading 91.046, slightly above and a close above, more importantly, this 91 area. Is this now signaling that bullish pressure coming back into dollar index as we see a decline through the markets? Let's take a look at the daily. So when we broke through that 92 and closed below it, we knew that was significant. We also know that the market has a tendency to move towards the next area, that being 89, quite a little bit lower than where the market got to right now for the dollar index. But we do know that one time and two times this 20 exponential moving average was found as a level of dynamic resistance. So if the market was to recover again, move up to the 20 exponential, it wouldn't be uncommon, and it could provide an opportunity where we could sync that up possibly with a decline in the indices. Remember, if US dollar tends to go up, usually that's coupled with the idea that the stock market is declining somewhat. So if we get back to that 20, maybe that's going to synergize with an important support zone on something like the S&P 500 or Nasdaq, which we'll be looking at very soon. So the 20 moving average will be an interesting kind of area. If we take a look where that is currently, it's 91.61. By the time this gets up, the 20 moving average will be moving down a little bit as well. So probably around that 91.50 would be worth targeting, having a look at, and of course dialing down into the smaller time frames. If we take a look at some other things that's been moving the market, things like US oil, we've had quite a few requests to look at oil recently, and I did think it was worthwhile bringing this up because we've struggled around this 46 area. You can see every time it's gone to that 46 on the daily time frame, it's found resistance and it's not been able to break close above that. We've mentioned for some time that if we do get a break close above 46, we're kind of expecting it to go back to the 50 range. And why is that? Well, you look at the weekly, you look at where the 50 range is, look how much support was through here, guys. This is an amazing support, which becomes resistance zone right around that 50, a very, very key level. If we go back to the daily though, another couple of things that'll be interesting to note. What if we now come back and test these previous lows at around 44? Well, if that happens during a decline in the markets, will that provide a potential opportunity for us as traders? It definitely could. We have a 20 moving average, first time it's touched in a very, very long time, and we've got previous support, and we've got also previous resistance. So there's quite a few things going on in the market that could provide opportunity in only a few couple of days, and it's worthwhile, again, dialing down into these time frames, checking them out, and seeing what's going on. What about the volatility index? What about the fear in the market? Is it extreme after yesterday's move? Not quite yet. But we've got this trapped. We trapped it earlier in the week. We trapped it between 20 and 23. And I did mention that I'm looking for the VIX to move out and above 23 in terms of a close before I'm convinced that the fear is back into the market. Anything in between this kind of structuring area is not going to show us enough fear to say push through a key level of support. Remember, yes, the market moved yesterday, but in comparison to what it's done in the past, it's not actually that much of an extreme move, and it makes sense for some correction to come through with any bit of bad news when you're so overbought on most key indicators. So 23 here, working around that for the VIX. Let's see if it closes above there in tomorrow's trade, or possibly we stay in this market structure for now and we'll continue to watch this story. We can see here that put-call ratios also increased heavily over the last 24 hours. This is coming off our base, which is where we usually find some form of selling pressure coming into the markets, that 0.6 kind of zone. Now already at 0.847, there's a lot of pent-up selling demand here, and that means, to me, unfortunately, I would like to see it kind of hovering in this zone. We don't want it to spike all the way to like a 1 or higher reading too fast, as that means that this corrective little dip that's going on right now won't be very deep. So put-call ratio is worthwhile watching, but not still giving us enough information at this stage. So we looked at gold and we looked at, of course, the dollar index the other day, and we were talking about this 20 moving average, hopefully holding it up. So yesterday, gold didn't quite hold that 1850. Yes, it went to the 50 exponential, found the resistance that we expected, came back down, and now it's hovering between this kind of like 1830, 1840 zone and 1850. It's just underneath that. I'm looking on the smaller time frames here to try to get an idea on direction. What I didn't do was I didn't just buy 1850 flat. I'm looking for some type of support or structure to be formed. That kind of support could look something like this. What if we have a little double bottom here on the 4-hour or 1-hour charts with a movement up? That's probably going to be enough of a signal for me to be interested in taking this long, and for a decent amount of chunk as well. We could be looking at least not only 1900 where previous resistance was, but possibly even the 1960, 1950 highs. So for gold, we're now still looking at this level and really dialing in and having to target the smaller time frames. The signal last time down here was a little double bottom on the 1-hour time frame. Very nice setup. I encourage you to go have a look at that in your own time. But gold is just, it didn't quite find that 1850 as support because of the adverse move in the dollar index. And if we expect the dollar index to continue up past this 91 to possibly 91.50, that's going to put further pressure on this gold trade. All right, well, let's take a look at Bitcoin. So it's been a couple of days since we've covered this one, and it's been pretty wild on Bitcoin. Let's have a look at the 4-hour first, just to talk about the break of key support that occurred. We had that 18,600 zone. The 18,600 found support, found support, found support with the bodies, and then of course closed below, triggering a very quick sell-off down to just above 17,500. Now, what's important about yesterday's recovery in Bitcoin is notice the level it came off. Also notice the type of candle that happened. We had wick rejections twice last time in the pullback, which body closed at the 20 exponential moving average. What happened? 20 exponential moving average was reached, breached with a wick. Now a bullish hammer has been formed and we're seeing some selling pressure coming in today. What do we know about bullish hammers? They're great and they do show us a rejection in the market, but guys, they don't necessarily tell us enough about the market moving up exactly after that candle closes. We want to see that little bit of a higher high, and then that usually shows slingshot momentum back into the resistances. So Bitcoin's holding up there. It's trying its very best to hold this position, and we might have another one like this where we see a sell-off today, weak rejection, and then of course a new break high. And when that happens, that break high happens, that's when you can get very excited about a position because you know that the momentum is going in your favor. The bulls have not only taken control the previous day, but they've taken control of the price action and pushed the market higher on this day. Even if you don't trade Bitcoin or cryptocurrencies, it's the same application that you can put into shares. If we take a look at Ethereum and think about what's going on there, Ethereum broke through this trend line we had drawn. It didn't quite get above that 1620, but 1620 resistance should still always be on your charts here. And when these types of things fail, they often sell off quite effectively and quite fast. Notice where Ethereum has made it back to. Let's put the horizontal line here. So we've got previous body closes, a wick rejection off this area, and now we're finding some form of resistance around these dynamic moving averages on the 4 hour, the 20 and the 50. If we break past here, we're obviously going to get rid of this line now as it's not really valid anymore. And we're just looking at a horizontal real resistance at 1620. So if you want to get involved in the Ethereum, you're going to have to dial down to the smaller time frames. But if you want to get involved in the longer term kind of approach, you're looking at 620 still and a breach of 620 followed by a conservative pullback, followed by, of course, a continuation to 650, 700, etc. This will be the zone that really creates the next kind of buzz around cryptocurrencies if it's able to be breached and broken up against. Don't expect it to be able to do so, though, if the dollar index continues to strengthen for the next couple of days. It may be a few weeks away, possibly even a month away or so, but 620, very good level still to have on your charts and to watch for the next couple of weeks, if not months. Tesla yesterday sold off. That 650, of course, was the resistance level. It was a great take profit zone, straight back down underneath even the 600. And we haven't even reached really what I think could be the next pullback zone, possibly to a 550 here. And it'll make sense when we have a look at the Nasdaq a little bit later. But yeah, basically a big pullback here on Tesla. There was a bunch of dumping of shares. I saw a few articles coming out that people were selling some shares as well in this. And I think that helped to really trigger the 7% decline we saw on it yesterday. Hit the 20 moving average, found some buying support off this previous market structure in there, but not enough for me to be like, yeah, I love that level or anything like that. Not just yet in terms of my eyes on the TA at this stage. Apple, another one that had a pretty significant decline. We came off the 125 area of resistance. We've then sold off to the 20. And notice where the buying pressure came in here. I'm sure many people on the channel, many of you guys out there would have been looking at this zone and thinking, I don't mind this. Previous resistances possibly becoming support at around that 120, 121 zone. And there was some buying pressure coming into the end of the day there for Apple. So people that are bullish on this is a bit of a pullback after a decent move up, and it's the kind of area that you would target in general terms, and of course look at your own system to try to make sense of whether it makes sense to you. So what about the Nasdaq? What's going on with the Nasdaq? Well, that was the big sell-off yesterday. We went from pretty much a 12,671 high all the way down to 12,358. That's a pretty big drop off. We still didn't even reach a 20 moving average either. Notice last time in a massive aggressive sell-off that happened on the Nasdaq, it hit the 20, bounced for the day traders, and then of course failed and moved underneath. What's the 20 lining up with this time? Previous resistance structure, obviously over here, and then of course here as well. So possibly the 20 here is something that we may see happen in tomorrow's open or during the session. We may see like a 12,200, 12,250 possible support found there, because look, support, 1, 2, what about this time? Makes sense that there'll be some type of day traders at those kind of levels. And of course, you can make your own decisions about how you work around those kind of concepts. But yeah, for now, this could be just a little bit of a flash kind of crash for now, followed by some further bullish pressure. And often in declines, it kind of goes like this. It goes down, up a little bit, finds resistance again, then comes down. And when it makes a new low past that, of course, then that triggers selling pressure to the next level. And then we start to really talk back about the 11.6. If we get through there, the 11.6 super kind of resistance support zone becomes open, and that gets us a bit more excited about buying, of course, a dip in this current market. If we have a look at the SPX, everyone's favorite, there's S&P 500. It actually reached the 20 yesterday. This is the real market. Remember, try to do your moving averages as much as possible around the real markets. And we've got SPX finding support buying, and a little bit of buying pressure coming into the close yesterday. We have our resistances through this 36.50 kind of peak. So if we reach down there, which would be similar to the Nasdaq, we basically find some buying pressure we would expect. And then anything under that zone, then we start triggering levels back to the 3600, and we start chunking away 50-point increments. We'll be making daily videos to really cover this decline if it continues, because it's very important to get updates on the daily of which support levels have been broken, so we can make more accurate predictions on what possibly could be happening in the future. So we hope that everyone enjoyed this video today. If you did, of course, remember to subscribe and hit that alert button. And thanks again for everyone's support on this channel. We appreciate it very much. And I very much look forward to seeing you all next week when we go live for another live market session wrap. Okay, guys, see you then. And of course, remember, as always, make as much money as humanly possible, but only when it's safe to do so. Bye for now.